Aloha. Hey, it's Julie Ziemelis from 365 Hawaii, and we are here for our monthly TTT, which is the third Thursday at 3, but it's week late because I was in California last month, week. I'm still having my moments. So we're missing Eric. He's not feeling so good. And one of our realtors from Waikoloa, Janet, is prepared to go on a trip. So she's working on that. And then Delaney is working on a listing. So we've got two awesome realtors today to help you guys. So we've got Lance Owens. He is with LUVA Real Estate, and he is the president of the Association of Realtors locally. And then we have Amber Haley with Hawaii Life Real Estate, and she'll be giving the East Side market update. We also have the Wynn team of Marla and Scott Wynn from Wynn and Eagan team, Citywide Home Mortgage. And with all of this amazing information that's going to come out tonight, I want you guys to really know that these guys are the top of their game. So thank you guys for being here to help us with some information about what's happening with the market and the mortgages. So let's start with Lance. If you will tell us a little bit about what you're seeing in the market and numbers, if you have them, go for it.
Hey, thanks. I appreciate it, you guys. Looking at the market, it's kind of interesting because it's been bouncing up and down. We use Caravan as one of our benchmarks, and we had 7 homes on Caravan today. So that's pretty strong. And what Caravan is any new listings for realtors to get out to, and they go visit it. So we get 20, 30, 40 realtors going out and visiting, so that when you guys call on it, they can say, oh yeah, I've touched it and felt it. I know what you're talking about. It works well. So to see up to 7, we used to have up to 20 per time, and it had to be split up into 3 areas. And so now we're combined everything into one area, and we're seeing it was 2, 1, 3, a year ago. So to have 7 out there long enough to actually be on the market and make it to the Thursday that we have the caravans is a good thing. And looking at the numbers, we're sitting at 50 homes available right now. I just looked as we were talking in the 3-7 area, which is Kailua Kona area, and we had 28 condos available. So for those that are new, typically we would have 150 homes and we'd have 100 to 130 condos available. So if you landed at the airport today, tomorrow we'd be out and we'd be narrowing it down out of 150 and 130. So
a few people just jumped on. Can you hit that again real quick, Lance? How many homes are available and how many condos?
So homes available right now, there's 50 on the market as of this minute, and there's 28 condos available. And that's no price point on anything. That's just everything available on the market. So
I know that there's some people in here who we're working with actually. Sometimes we get this I think my listing alert isn't working because I'm not getting anything.
Yeah.
My realtor, I don't know if they actually understand what I need because they're not giving me anything. I'm like, because there's nothing. That's why. So
I have to do that disclaimer. I'm like, look, the price point you gave me, you might not see one a month, maybe. So if you want to, we can go a little bit higher so you can see, just to watch the market and see where it's going. But yeah, that is a problem. And they think we're not listening.
Right, because I know that people have been looking in the 400 range for condos, and it's starting to scoosh back that past that now. So so maybe if you're on a listing alert and you're not getting anything, you might want to try a different parameter. But just know, as Lance was saying, there's just not a lot of inventory out there still. So and then and we'll click Lance on the homes that are available. I saw Caravan today. Like 2 or 3 are up in Pualani.
3 of them were up in Pualani Ranch, which is 20, 25 minutes, 30 to downtown, maybe from Kona. And they were all, I think the lowest one was 1.3 million. And the highest one was up at
2
something. I wanted to get up and see him. I didn't get a chance to today though.
Yeah, well, that one with the view of Pu'upu'a Vai, that was amazing. Yeah. You guys, there's this picture. You're looking out your window in the kitchen, and it's like this valley and then this cinder cone that's covered with green. If you ever drive from Kona to Waimea up on the upper highway, it's called, why am I having a brain fart? Pu'uvaiva. Yeah. Pu'uvaiva. That's it. Yeah. And that's their view in the morning. They wake up and there's this grand vista, but it was like $2 million. So if you're in the market for a massive estate, check that one out. Anything else, Lance, on the West Hawaii
I
market?
pulled up the condo since you mentioned that. So our best price condo right now is a no, I'm sorry, it's a studio at 349
Mhm.
and a 1-1 in Kailua Village at 389 and Konabali Kai at 1-1 at 395.
395.
Then we jump up to 469. Kalani Kai just came out a few days ago at 469
Mhm.
and 499 in Lee Banyan. These are all fee simple. And Elite Villas, where you see a lot of these in the $100,000 range for the leasehold ones. The best price fee simple one is $499 in there right now.
499. Okay. Okay. I just got a call today, you guys. Like now I get to be a realtor, right? So I get a call. Hey, I'm here. I'm visiting the island. I'm here for 2 days. Can you show us a condo? And I'm like, oh, yeah, I can do that. And then they said, well, we want to see the one that's 195,000. I think it's 195. And I'm like, I'm like, that's fee simple or a leasehold. And they're like, well, the Zillow doesn't say that. And I'm like, I don't think Zillow tells you if it's a leasehold. So I was just saying, that our average price of a condo actually is closer to 400,000. And they go, oh, okay, goodbye.
I'll give you that number for median sales price for a condo right now is 620.
620.
Median condo, yeah, it was
Okay, and that's for your-
435 a year ago. And
Okay.
it's 620 in Kailua Kona right
So
now.
that's your average 2-bedroom, 2-bath.
Median price.
Okay, just so you guys know, there you go. That's the answer to that question. So Amber, do you have any better pricing that you can share with us from East Hawaii?
Maybe like a little bit better pricing, but overall, so this week I've been kind of looking at Q1 of this whole year now that we're into the spring market. And one thing I kind of had been thinking was that I'm seeing more days on market because overall it feels a little bit less frenzied than it's felt before. But when I actually looked at the numbers for East Hawaii, Q1 of this year, so the first few months versus last year, we're seeing a lot less days on market than we saw, but almost 43%. So significantly, our average days on market is 50, and that's for all properties. Our average sales price is up almost 30% in East Hawaii from where it was a year ago. I mean, that's pretty significant when you think about that. So while we do have a lot better pricing than the west side of the island, home sale prices are 28.8% higher in Q1 of this year than they were a year ago. And our average price per square foot is up just over 30%. So, the market keeps going up. We have the inventory is still pretty low. Everything else is pretty comparable, but we are seeing the prices increase, and there's still a lot of buyer demand. So it is still pretty competitive in East Hawaii. I don't think I have all the numbers pulled up, but we just do have a lot more numbers over here than in West Hawaii. There's a lot more inventory.
Well, what's
more active real estate market.
So I know that one of our people on the call, Sally, is looking over in that side. And there's also, I think, one or two other people that were looking for East Hawaii. Can you tell us kind of like, I don't know if you do this or not, I'm sure that there's some level. Can you tell us what the average price for a home is like in Hilo, the city, versus Keiau down like in the, the lower part of the Puna region? We lost your I can't hear you.
Muted, Amber.
You're muted. Amber.
we missed a good conversation there.
Okay.
What?
All right. So generally when I refer to Hilo, I'm mostly talking about the South Hilo district technically. So that's, Hilo town and the kind of surrounding area there. So right now there's 46 properties on the market. That includes condos and single family homes. There's not that many condos ever on the market in Hilo. But the cheapest price is $145,000. That's obviously for one of the cheaper condos. The most expensive is 2.8. And then let me look really fast so I don't tell you wrong. 1 second. And then as far as like pricing, and if you're kind of newer to East Hawaii, the Hilo district and then up North Hilo, Hamakua, that is a lot more expensive in general than if you go south of Hilo to the Puna district, which is a really active real estate market. And the main reason for that is because the land is less valuable. There's riskier lava zones. When you get farther south of Hilo, you start seeing property that's in lava zones 1 and 2. So overall, home prices are going to be cheaper. in the riskier lava zones and south of Hilo. So right now for a single family home so we'll say the South Hilo district, median sales price is $572. And a year ago, it was $375. So for those of you looking kind of closer to Hilo town, that's about what you're looking at. Now, if you compare that to like the Puna district, where you have like Kayao and big neighborhoods like Hawaiian Paradise Park, and then also lower Puna with those riskier lava zones, the median sales price there right now is about $365, as compared to a year ago, it was about $265. So it's still up, but it is overall significantly cheaper than Hilo itself. Again, keep in mind, some of that district is lava zone 3, some of it's 1 and 2. So there's going to be a big discrepancy based on where in Puna district you're looking to.
Right. And then lava zones 1 and 2 are harder to get loans on. You can't get a loan. You have to pay cash for it. So that keeps price.
But you can get a loan in lava zones 1 and 2. You just can't necessarily get a loan. It's trickier. It depends on the person, the loan program, like what type of loan, what the house is like. But I do know some lenders right now who can do like a VA loan in lava zone 1, even with a higher down payment. So it is possible, but it's not always possible.
There you go. And Lance, what are you showing behind your head?
I was just showing for that's the zones that Amber was talking about, so this, you can see on the map here, the Puna and the South Hilo, so it gives people a visual of the areas she was referring to.
Okay, so South Hilo is the magenta, so people can see kind of how that goes. Yeah. Okay. Okay, so that's good news. Okay, so before we jump into the mortgage, I know we got some new people. Hi, Stephanie. If you guys, and you know what, because Stephanie's here, Lance, real quick, she's looking for a condo in Kona. Did you
we showed her properties? Yeah.
Okay, good. Yeah, you guys
Kona,
that's right. Never mind. Okay, because I think that new one just came up on the market today. So is there questions about the housing market, real estate, anything at this point from the gallery for Amber and Lance? Okay. Nope.
Real quick, Stephanie, that one that just came up in Kalani Kai when we were looking at Kailua Bay Resort, and I said that place was right next door. That's one that just came on the market. That's right by the pier, right by downtown, right by walking to everything.
I saw that one. Did you say Kailua Village?
No, the other one. Let me pull it up here real quick. It was Kalani Kai at 469.
Oh, I didn't see that one. I'll have to check that out.
And maybe because it's a 1-1.
You didn't meet him. He was stuck in New Jersey.
I saw you FaceTiming. I'm high. But that's something to look at. So that was right by the area that, if you remember the place that had the key to the gate that went to the back of the shopping center.
Yes.
And so Kalani Kai was when I pointed to the building and said, sometimes these come up. So that's one.
Okay.
Something new for you to look at. That's a good day.
Cool. Thank you.
Okay, so without questions for real estate, let's jump over to mortgage. So Marla and Scott, let's hear a mortgage update and what's happening and maybe some strategies for winning in this market.
Sure, sounds good. So Scott Wynn here with the Wynn and Eagan team, Citywide Home Loans. I guess the first thing I want to address are interest rates. I don't know if you guys track interest rates and what they've been doing here over the last couple of months, but they've been increasing quite drastically. It's probably the fastest I've seen interest rates increase in my 20+ year career. So currently, according to Freddie Mac, who does a weekly rate survey, just kind of get a general idea of where rates are right now, they're estimating average interest rates at about 5.1% right now. That's somewhat vague just because, of course, everybody's situation is a little bit different depending upon where they're buying, what their qualifications are, down payment, loan program, all those sorts of things. But that's a nationwide average and it trails about a week behind. So currently 5.1%. That's based off of like a 760 credit score, 20% down, owner occupied conventional loan. So just to give you that in comparison, at the beginning of the year, we were sitting at about 3%. So like I said, pretty drastic increase in interest rates over that period of time. So I guess the piece that I want to address is the fact that this might be a little bit fearful to some people in terms of the fact that interest rates have gone up as quick as they have. And along with it, we're seeing low inventory, as we've been talking about. We've been talking about high price appreciation and things like that. So I'm just curious if any of you are wondering if now is still a good time to buy, if you're worried about what the future of real estate looks like, is that a concern to anybody that's here? A little bit. I mean,
Absolutely, it's a
yeah, it's a little worrisome, right?
everybody.
And I think
because
like if
worry that they're giving their rates will keep going up.
Sally, say it a little closer.
Oh, concerned that the rates could keep going up.
Mhm. Yeah.
so, the
So-
Fed has talked about interest rates going up, right? And I think that's what a lot of people look to for what they anticipate will happen with the future of interest rates. I think it's probably worthwhile to address that when the Fed talks about increasing their rates, and they're talking about doing that another 4 to 7 times over the next year to 2 years, what they're not referring to are mortgage rates. They're referring to the Fed funds rate, which is a very different interest rate in comparison to mortgages. And so what likely has occurred with mortgage rates is a reaction to the Fed stating that they're going to increase interest rates. So even if the Fed increases interest rates 4, 5, 6 more times over the next year, that's already, in my opinion, been built into the rates that we're seeing right now. So if they increase it again, it's not that we're likely going to see that same level of bump up every single time they increase interest rates. So hopefully that addresses that aspect, because mortgage rates are based off of what is going on in the economy. And when the Fed tells us what they're going to do, the economy basically responds ahead of when they actually do it. So that's why we're already seeing those interest rates as high as they are and as quick as they are, because that would be the fastest that the Fed has increased interest rates in the past as well. So for me, one of the things that it kind of jumps out at me is if we look at housing appreciation pre-bubble, right? If we look at housing appreciation between, let's say, 2005 and 2008, we were seeing some pretty massive price appreciations during that time period. And we're seeing that right now as well. I mean, I think Amber and Lance both talked about the fact that prices are going up significantly, 20, 30% increases over the last year. And so I think that is why people are worried about the fact that we might be in a bubble again, right? And that maybe we'll see some price drops here in the future, or we're going to start seeing what we saw back in 2008. And, but I think that's really why there's fear, is because if you just look at that one thing and that one thing alone isolated, it's a bit of a concern. And you look at all the headlines and you see those big news outlets telling us that we might be headed for a crash, or that a bubble is here, or it looks a lot like 2008. But there's a lot of underlying fundamentals that are very, very different between now and what occurred back in 2008. So we've put together a resource that I think would be valuable to anybody that's considering the idea of buying a home and maybe fearful about what the future looks like. And we'll post the link so you guys can check it out. It gives you those underlying fundamentals so you can see what the market looked like back before the bubble and what we look like now. So hopefully that'll be valuable to you guys. The other piece that you mentioned, Julie.
Well, I was gonna say,
is-
Scott, the long and short of it, I think you were saying though, is the fact that we don't have the kind of speculation in the market and the kind of crazy that was really going on, with everyone getting a loan for nothing. So that's part of it. And yeah, so, because I was in that.
The fear.
No, I bought a house for
Oh,
5%
right.
down with stated income.
Yes, exactly. That's a big part of it, right? I mean, mortgage rules have changed drastically over the years. I mean, prior to the bubble, you could do 105% financing with stated income or no income verification. And just, it was a different world back then than we are seeing right now in the mortgage world. The risk in the lending world is much, much lower than it was, just because the banks learned their lesson that they probably shouldn't do that, right? So
Yeah.
they've tightened things quite a bit. Yeah. The other thing, I guess, is to provide a little bit of hope, if you will, in terms of how do you compete in a low inventory market? How do you get your offer accepted? And I think there's a couple of things that I wanted to share with you that we've addressed in previous TTTs that I want to bring up. And that's, how do you compete with cash? In a low inventory environment, of course, sellers are going to accept cash offers, most likely, over financed offers, if everything else is equal. And so one of the strategies that we're putting in place is to get our pre-approvals fully underwritten. So normally in a mortgage process, you go through a pre-qualification process, complete an application, credit check, things like that. maybe provide some documentation, and then the lender offers a pre-approval. And that's generally where it stops in the past. But now what we're doing is we're actually submitting into a person underwriter. We're doing what we would typically do after we find a home and go under contract. We're doing that up front. And that's just going to give the seller peace of mind to know that basically it's as good as cash, that you guys as buyers, you've gone through the fully underwritten process where it's been in front of a person underwriter, that they have reviewed everything and that they've given their stamp of approval that you can qualify. So that's one thing that I think can help stand out in submitting offers if you're getting financing. The other is a special program that we've recently partnered with called Revive. And basically what it allows you to do is a non-cash buyer is to buy a house cash. So what ends up happening is we work with Revive once we have you fully underwritten and approved to have that home purchased by Revive as cash. And then you rent from Revive until you then buy the house from Revive using financing. So it's kind of like a workaround situation so that you can buy the house cash and be a cash buyer and compete with cash without actually having the cash up front and still utilizing mortgage financing. So we'll provide some details about that program as well. Looks like Marla put those in the chat for everybody, so you guys can check those both of those resources out about the housing bubble as well as that Revive program.
It should be no bubble, not bubble, no bubble. Okay. So, is that how I can ask people, because we have another couple people just joined too. So if you have questions about mortgage, Marla and Scott can answer those questions for you right now, since you guys are good to be part of the live audience. And then ask maybe Scott if he knows more about like what's happening with the mortgage market that's coming up, or how to qualify, or any questions you have whatsoever right now about financing. Now's that time. These guys are experts.
I think Lance has a question.
Lance?
Or comment.
Yeah, a question for you, Scott, because I know, and it maybe help the other people understand it too, but I know, that I don't know your program. I'd like to find out more about it too. So I'll reach out to you later and find out more about that program. And these things typically cost a little bit more money on the, I guess, is it in points or something like that?
The buying cash program, is that what you're referring to?
Yeah.
Yeah.
Is it the points or and just to help everybody on that, because a lot of times the finance buyer has to offer a significant amount more than a cash buyer to get it accepted. So to pay that fee that you're talking about up front is not, may not be near as bad as it looks when you look at the whole picture. So that was just,
I think there's two factors that provide a benefit to a financing buyer using this program to pay these costs. The first one is exactly what you said. In order to compete with cash, sometimes you have to bid even higher than what a cash buyer would. So that's one part where you're paying more. The other part is the missed opportunity and the pace at which the market's appreciating, right? So if the market's appreciating at, let's say 24% a year, that means every single month that goes by, the market's appreciating 2%. And even condos, I think you mentioned the median home condo price, that's not even single family homes, is in the 600s. So we're talking about $12,000, 100 and whatever that comes out to. I don't know, I'd have to do the math. But you're losing the price appreciation every single month that goes by, right? You're missing out on that by not being in a house. And so the cost for the program to participate is generally 3% as a preferred lender. We get a 0.25% reduction in that. If you don't have a house to sell, if you just have a down payment in cash and not a house to sell, but you don't have the full amount in cash to pay full price with cash, then you get an additional 0.25% reduction. So the fee could be as low as 2.5%. So it's between 2.5 and 2.75, depending upon situation. But if that saves you 2 months of time to find the right house because you can secure it, you probably already came out ahead based on just condo median prices. If we're talking single family homes, it's even faster than that, probably within 1 month you benefit. So yeah, so that addresses that hopefully.
Yeah, thank you. Because I get people that just walk away from it because they don't understand the bigger picture.
Yeah.
So thanks for explaining that.
Sure.
Okay. Okay. Again, people have just been coming in. The people who've gotten here late. Lance had gone over the market dynamics in West Hawaii, and Amber had done the East Hawaii. So you can always go back and look at these again. I'm going to post this whole thing to YouTube after this is over with, so you can get it back again. But in terms of general questions about being here in Hawaii, looking for a home right now, do we have like, and if you guys don't have certain questions, I'm gonna ask these guys a little bit of, these little hypotheticals I've been hearing from people. So if you're coming to Hawaii, like I've heard this one, they show up and they go, okay, I've seen a house I really want. And the first thing that people's gonna ask you is, do you have the money for it? So making sure that you're pre-approved, like Scott was saying, get with a mortgage broker. These guys are awesome ahead of time. If you find the home of your dreams, but you don't have all the paperwork done, you were going to lose that, because Lance and Amber, am I right that most of those houses are the good ones are going under contract within 5 days? Right. So it's not even worth shopping unless you have the money. So it's just becoming so that people, there's some realtors that we've seen that won't even entertain a bid unless you're pre-approved. So it's really, really important. So do due diligence. I see some people in here, I know they're in the mix of it right now, trying to find houses. And there's a couple people here I haven't seen yet before. If you're in the beginning stages, seriously, talk to these guys. And if you have cash, fantastic. And make sure that, you're working with these guys ahead of time. They can put you in a listing alert so you can see what's coming on the market. It's a great way to do some research about what's happening in the market, so that, again, when you decide that you want to buy a house, a little bit more about what the neighborhoods are doing, and how fast something's about to go off, because based on houses just like that, like let's say a 3-bedroom 2-bath in the Leahy Heights, it's like this in 24 hours. So there's that. And then also Lance and Amber, do you want to talk a little bit about maybe a market shift that might be coming, or a softening that might be coming if the mortgage rates go up? Have you guys heard that in the national news? And what's your thoughts on that? I'm sure people have been talking about that too.
Yeah,
I'll
I
let
mean,
Amber go.
Oh.
You go first. Go.
Yeah, I mean, I do hear a lot of talk of that, and I feel like it's kind of what we've been waiting for, at least what I've been saying for over a year. I'm like, well, when we see something with the rates, like that's got to be, the thing that changes things. So yeah, there's a lot of talk on that. And I think we're just at the beginning of this. So we'll see. I don't want to throw out predictions and be delusional about what I think is going to happen, but I definitely think that it's going to affect things. So we'll see. Yeah, lots to talk about it.
Yeah.
I keep hearing it too, and I've had clients calling me and saying, so this is it, this is going to happen, and I'm just like, I'm not seeing it yet. And I'm like, Amber, I don't want to say it's not going to happen because I don't know. It's a little bit scary because it has gone up. And we're looking at financing on condos. About half the condos that are purchased are financed, and about 2/3 of the homes that are purchased are financed. So it's a big area of things that interest rates are going to affect. So is it going to slow us down? We still have the people coming in, interest rates or not. So at this point, I don't see anything. And I'm gonna stick to that, but I'm not gonna, my crystal ball is dirty. Right
Yeah, cloudy. Well, and also we have a lot of pent up buyer demand. There's still a bunch of people waiting for something to happen, and there's still not enough inventory for all the people who want to move to Hawaii either. So you got that part too. In fact, I saw a graph that basically said that home starts were down obviously in the recession, and they just never caught up in 10 years. So we haven't been building enough homes for the last 10 years. And they say it's going to take years to get the housing imbalance taken care of. So even with the interest rates, there's still just not enough homes in America, and let alone Hawaii, to put everybody into a home who wants one. So I think it's going to still be musical chairs at this point.
I was just
Sorry. I was just going to piggyback on what you said, that there's also been some information in the news recently about home starts are down. However, home finishes are down as well, because they're starting homes, but they don't have the materials and labor that they need to finish the homes. And so there are a lot of homes in process that have been started that the finishes have been delayed too.
We just need more people building homes, so, and then Lance, I'm sorry, you were going to say?
I've been kind of studying up. I'm headed to DC tomorrow night, Washington DC for the Realtor mid-year, and we're going to be doing some at the legislative meetings. But one of the things I was just reading on was, and I'm looking to the right here, sorry to read it on my other screen, but a recent study estimates that the US has developed an underbuilding gap of 5.5 million housing units. So, we're looking in there. Two of the things we're going to ask for is the Housing Supply and Affordability Act, and it's going to create a grant program for certain states and cities. So that's something. And another thing is the National Homes Investment Act. So keep your eye on those two acts. It's going to help work towards this gap and give tax credits on a federal level to people that start building and doing things. So
That's fantastic. That would be, just because, again, they're talking about how the millennials are buying homes as quick as they can, but my kids age 20, 24, they can't even get out of their parents' homes. There's like no move up experience for everybody. So something has to be dealt with sometimes on a large basis like that. The federal government sometimes needs to get involved. I was just saying that we're stuck in Hawaii. We don't have enough appraisers. And they're talking about this today in Caravan too, that a lot of the appraisers are aging out. They're just retiring, and there's not a lot of younger people coming in to fill that gap. And I saw what it takes to be an appraiser, and it takes a lot of time. It takes a lot of time and a lot of education. And so if anybody out there knows somebody who wants to live in Hawaii and has an appraiser background, please come to Hawaii. They need them right now. So, and I'd say give those people housing credits. And the people that actually make society run, we also need heavy machinery operators, Lance, so that we can get those septic and cesspools switched over. So anybody else have questions or comments on the market or being part of the experience of hopefully being a home buyer in Hawaii? Okay, you guys, I'm gonna pitch my books then. So if you have yet not seen this, I have written a book called Insider's Guide to Buying Real Estate on the Big Island of Hawaii. And it has a lot of the nuances and stuff about being a home buyer here, and also how to move to Kona, which basically gives you like the concept of actually moving to this island in general. And it gives some great resources for setting up a home, moving, all the things you need to do to basically move to this island. So those are available through my website at 365kona.com/moving. And also I have it on my 365 Hawaii. If you join that, these are downloaded for free. But if you want the hard copy, let me know. And if you'd like, because you guys are so amazing, you're actually here today, I have my copy of my 1 year, 2 kids, 800 square foot book. Is about when we moved here with my kids. And then basically it's a memoir. And I will give these to you guys for free because you guys are here today. So let me know if you want one, and I'll get one over to you. With that, anything else? Okay, thank you guys for being here, and you guys will do this again next month. And hopefully those of you who are in the mix looking for homes will find them by next month. And good luck with that. And I will see you guys next year. What's wrong? Clearly I'm going to France next month and my head's gone. So, okay, you guys have a good one. Aloha.
Aloha.
Thank you guys.
You.